there's been a lot of buzz about a new residency test, which is stricter and make it much harder to break away from the Australian tax system compared to the current rules. This video is requested by Anthony Cadiendo 4265, Madas13BBP, and Benedict 4363. Thank you very much for suggesting this topic. And in this video, I will break down the exact proposed residency rules, how they could affect you, and when they are expected to take effect. The proposed rules are set to replace the current complicated subjective residency test with something simpler and much more black and white to apply. It is called the Bright Line Tax Residency Test. Is it really stricter? Don't just take my words for it. Let's look at this government report documents together, where it set out the proposed rules and the principle behind these changes. So this is the report submitted and accepted by the Treasury in 2019, and it is announced in the federal budget in 2021. It outlines 4 key principles for reforming residency rules. Let's read the document together. So 4 key guiding policy principles were set out for designing new individual tax residency rules. All the rules will be around these 4 key principles. So every single rule have to meet these 4 core principle tests. First, it have to be adhesive residency. So it should be harder to see residency than it is to establish it. Obviously, try to keep you in the system. Second is certainty. The new rules should be designed to be straightforward and provide clear and consistent outcomes for the majority. Third one, simplicity, to remove uncertainty and complexity through clear, reasonable rules. And the last one, integrity. The rules should not make it easier for individuals that have close ties to Australia to be able to manipulate the system and not pay their fair share of tax in Australia. So any one of you who have connection with Australia, this rule will try to pull you in. If you have family ties, properties, assets in Australia, it will be very hard to break away from it. Now you have seen it for yourself. And what is exactly the Bright Line test? Let me show you the main rules and how the Bright Line test works. If you are physically present in Australia for 183 days or more in an income year, you are a resident, full stop. But if you are here for less than 183 days, it doesn't end there. So for someone who is a government official employee, no argument, stop there. Wherever you are in the world, you are an Australian tax resident. However, for the rest of us, if you live less than 183 days in Australia, we have to continue on. Then we have to ask ourselves, were we a resident in the previous income year? So when you prepare the last year income tax return, you obviously know your residency. So for the majority of our audience, most of us are living in Australia, and if we want to break out of the system, we have to check whether we cease the residency. So let's move to the ceasing residency test. The easiest one is to satisfy the overseas employment rules. Once you satisfy this rule, you are outside of the system and be a non-resident. I will go back to the detail of this rule. However, let's move on to the flow of the test. So for some of you who are digital nomads or expats who have a lot of jobs outside of Australia, they obviously don't have an employment outside, or at least it won't fit in those criteria. You need to decide whether you are a short-term or long-term resident. Have you been a resident for less than 3 consecutive income years? If yes, you have been a resident for less than 3 years, then you are a short-term resident and you have to check out this test. Did you spend less than 45 days in Australia this income year and satisfy less than 2 factors in the factor test? Let's see factor test. So basically, you have to live in Australia for less than 45 days and you can only tick 0 to 1 item in this box. So the first item is right to reside permanently in Australia. This is according to immigration law. So if you have a permanent visa or you are a citizen, then definitely a yes for this item 1. Australian accommodation. If you have an arrangement to live in Australia, you have a permanent place or a fixed place that you can live in, then it's a tick for this box. It excludes any rental property that you rent out for the whole year where you don't have access to the property. However, if you reserve a room in that rental property for your own use, where you can go back to Australia and return and live there, then it's also a yes. And third item is Australian family. It only applies to your spouse and your dependent child who are less than 18 years old. So if your spouse and child live in Australia, it's a tick to this item. And number 4, Australian economic interest. So if you have employment in Australia, carry on a business in Australia where you are the controlling mind, or you have direct or indirect interest in Australia. So if you have a bank account where you have a significant amount of money in that bank account, then you have a strong economic ties. Currently, the draft rule doesn't specify an amount yet, and it will be very hard to decide. The government will have a lot of discussion with the industry and the public to decide that amount. Or you are the test individual of a family trust election. There are also other specific circumstances that apply to determine your interest in Australian asset. So there you go. If you have 2 or more items on this list, you will be an Australian resident. If you have 1 to 0 and living in Australia for less than 45 days, you are a non-resident from the day of your departure. For any of us who have been an Australian resident for the last 3 years, then you are a long-term resident. You have to seize the long-term resident through this test. This you spend less than 45 days in Australia this income year and less than 45 days in Australia in each of the 2 previous income year. If no, you are a resident of Australia. If yes, then you are a non-resident. So those are the tests. If you don't want to look at the overseas employment test, let's go back to that. To satisfy this test, you have to meet all 4 items in this category because this is an AND test. So residing in Australia for the 3 prior income years. The idea of this condition is to ensure the rule only applies to people who've genuinely been connected to Australia. So it's designed to prevent flip-flopping in and outside of the system. Second is employed overseas with an employment period of over 2 years from the commencement. So basically, once you leave the country for this employment, in the contract, it must state that this employment is at least 2 years. Third one is having accommodation available in the entire period. So you have to be, this employment have to be totally outside of Australia. You have to perform the work somewhere else, and you need an accommodation to facilitate for the whole period. And the last one is spending less than 45 days in Australia. If you meet all 4, then you are non-resident from the day you depart the country. So that is the step-by-step guide how to go through the bright light test. So where are we now? When are these rules are expected to take effect? The rules were first announced in May 2021 federal budget, almost 4 years ago. The report was submitted to the Treasury in March 2019. The Treasury consulted on a new framework in 2022, and there's been a lot of support and demand for simplifying the current rules. But since the Albany government came into power, there's been no progress in turning this proposal into law. That said, this tax residency reform is still on the table because the demand is high. But within the tax industry, there's been no further consultation, no update from the ATO. If we look at the ATO matters under consultation, if you see 22, 23, 24, 25 completed matters and matter under consultation, there is no individual tax residency reform that is discussing. And these discussions are very important. Before the ATO implement something or the government implement something, they always call for the public opinion. They get input from the industry, from the agency, and from the academic bodies to have opinion to firm up these rules before it become legislation. So far, there's nothing. So what should you do now? If you are planning to move overseas, work remotely, abroad, or split your time between countries, you still need to rely on the current residency rules, which I explained in the previous video. The link to that video I will put at the end of this video. As you can see, the proposed test is much stricter. It could result in taxing digital nomads who are just passing through the country, expat visiting family, or people returning to Australia for a few months each year. In the previous rules, you can argue your case depending on your specific situation. For example, there is a court case where he argued that his ties to his career is much stronger than his ties to his family, who are still living in Australia, because he's been chasing his career through different countries. The court ruled in favor of him that he is not a tax resident. However, to exit the bright line test, it takes 3 years planning. Once you leave, you cannot return for more than 45 days per year for the first 2 years. Only in the third year will you be considered a non-resident. And this is very black and white, so there will be some unfair situation for people with specific circumstance. And that is the general guide for these proposed rules. If you find this video is helpful, please give a thumbs up and share with a friend who might benefit from it too. Don't forget to subscribe. This is Hannah, the tax advisor you can trust. Thank you for watching.